All right, I want to bring up our next speaker, Sanjoy Malik. He is the chairman and CEO of Urjanet. And so we've just been hearing a little bit about making renters into buyers, and you are also dealing with the underbanked a little bit as well. I'm going to let you take it away.
Thank you. My name is Sanjoy Malik. I'm the CEO of Urjanet. And today we are going to talk about a big problem. This is a problem that is not in the US alone, it is across the world. And it is also a big opportunity for a lot of the folks that are in the audience today. And this is a problem of a lack of financial inclusion for many people in the US and across the world. So according to FDIC, 23% of Americans are unbanked or underbanked. And this comes from the fact that most people in this category have scores, credit scores which are below 700. And of course, this problem is not only in the US, but across the world. The scores of under 700 also mean that 50 million people are credit invisible. What this means is that there is not enough information about their financial services or banking activities to accurately predict their risk or attractiveness to lending institutions and financial institutions. And then this problem is not only limited to consumers, but also to businesses. About 160 million small businesses lack banking access. And these are small businesses. These are businesses that may be transacting in cash. And this lack of access to financial services becomes a big impediment from the opportunity for these businesses to grow and prosper. And if you go beyond the US or go beyond the developed world, this becomes an incredibly big problem. It's a problem that affects more than 4 billion people across the world. Not having access to financial services can be a limiting factor in their prosperity. There are a lot of people who cannot get above the poverty line. So this is much beyond just a problem of financial access. It becomes a problem which is social and really affects humanity at large. So who are these people that are unbanked or underbanked? It may be a new college graduate that is just coming into the world. It's their first job, but they have very little history with banking, or they have not taken a mortgage, have not applied for any loans. As we look at the new folks that are coming into the business world or the world of employment, a lot of them are millennials. And one of the things that we see with millennials is that a lot of things they want to do is through cash. And of course, that again becomes a limiting factor in how much data is available to support their access to financial services in the future. This problem may be an immigrant who's new to the country. They may have had a lot of history in the country that they come from, but as they make the move to come to the US, that history doesn't sort of carry over with them. And then, of course, it could be people who are quite prosperous and quite wealthy, but have not had a chance to build up their credit histories. An example is maybe a divorced mother who did not have access to banks under her own name. So it is very difficult to suddenly then build up this history. And then if you go outside of the US, this is a big problem. This is a problem that affects a farmer in Kenya that is always working on a cash basis, or a small business in India that has never had an opportunity to go beyond the money lenders to have access to banking services. So consumers are missing out on opportunity, and the financial services industry is missing out on a big business opportunity to provide services to these people who are currently not in the realm of somebody that they can service. It has been said the World Bank had some information or some data on this. So by getting providing inclusion to these people who are unbanked or underbanked, we could bring 100 million adults on a global basis into the realm of people who can then take advantage of banks and financial services and mortgages. And then for people in this room, what is important to understand is that this is a huge, huge opportunity to create more revenue, to have more consumers, to really widen the market beyond the market that exists today. So it represents $300 to $400 billion in services that banks and lending organizations could provide to people that don't have access to these services today. So how do we do that? And how is it, why is the time now, right? There are a lot of new technologies that are becoming available. Obviously, we have talked about machine learning and blockchain and AI, but more importantly, there are technologies that are able to aggregate data intelligently. There are technologies which are improving the federated nature of databases and creating these semantic databases that enable all this data to be accessible for the first time. And then, of course, there's new business models. We want this information to be available on demand so that it can be part of the credit stream, right? And then, of course, this data should be available as a service so that financial institutions or credit rating organizations do not have to create huge databases and have to invest in data centers. And all this is becoming possible with the new technology that is becoming available. So the new data enables us to understand history outside of the traditional data sources. So this is, we've heard about alternate data. So this data now can become part of the data sources that CRA financial institutions are looking at to evaluate their consumers. And this data is for the first time available at scale, which means that if you are looking at this data, you are able to cover all the consumers that are coming to you to access your services. And then, of course, this data is also becoming part of the scoring algorithms. You've seen a lot of news from FICO and other folks that are saying that this alternate data, like utility data, can become part of the scoring algorithm. So Urjanet, which is my company, is a leader in providing consumer permission payment data on demand. We get this from over 5,000 utilities on a global basis. And this data is coming directly from the utilities, so it can be trusted because it's directly from the source. It is consumer permissioned, which means that we are not collecting data on a lot of consumers and providing it without their explicit consent. And then it is available on demand. So what that means is that financial institutions or credit rating agencies, people who are using the data, can make it part of the credit stream so that you are able to complete that transaction very, very quickly. So, we have aggregated on the utility side more than $70 billion in utility spend. We are connected to over 5,000 utilities on a worldwide basis, and we are adding 100 new utilities on a monthly basis. And then we are in 43 countries and are able to provide these services in multiple languages. So what does this really mean? We have seen that people are willing to provide this information to their financial institution. Some of the studies that have been done say that if there is a good reason for the consumer, if there is something in it for the consumer, they are very willing to provide this information to add to their credit scores. And then we have also seen that CRAs are saying that this utility data or this alternate data can provide a lift in approvals without a real negative impact to the lenders. So our opportunity is to bring 4 billion new consumers into this market. We can bring 160 million new businesses to this market, which creates a massive opportunity in new revenue globally for financial and lending organizations. And more importantly, it means that we are taking the underbanked to the understood. And this is an opportunity that is not only important from a business perspective, but it's an opportunity that is really impactful for many hundreds of millions of people across the world. Thank you very much.